Hi there. Welcome to the Fundication Show. I'm Julie Tallman with Christian Sadler,
Hey, everybody.
and we would love to introduce Chris Miles. He's the founder of Money Ripples. Thank you for being here. Thanks for driving up and spending your time.
Hey, I'm just glad I can drive up. I'm used to doing this virtually, so being in person is such a big change.
It's nice in this day and age to actually see people.
I
I
know.
want to give the viewership just a little background on you, straight from Chris's bio. He is cash flow expert, anti-financial advisor, which I can't wait to find out what a great title. And he is an author, podcast host. He is of the Money Ripples podcast. He's been featured on U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and really has a proven reputation with Money Ripples podcast. So thank you for again just for being here, and let's dive in. Talk about all the similarities that we have with Money Ripples and PREIshare.
Absolutely. We love real estate, right?
Yes.
Or as my shirt says, I love passive income. It's true.
Perfect. Well, let's talk about that. The first question I have for you is you said let's talk about why every real estate investor needs passive income. So let's go with what the T-shirt says. Why?
Why? Because it's awesome. That's why, right? And not just that, because let's be honest, like most active real estate investors really are more active business owners than they are investors, aren't they? Especially if you're a wholesaler or flipper, you make sick money. You make great killing of money. But at the end of the day, you start to realize you're very transactional, much like a real estate agent. And so if you don't have income coming in outside of that, especially when there's, all these potential law changes going on and everything else with NAR and whatnot, like you don't even know if your business is going to fold. And so you've got to have multiple streams of passive income coming in that you don't have to actively work for. And so one thing I've noticed a lot of wholesalers doing lately is they're not just, even flippers, they're not just trying to get the transaction, get it done. They might cherry pick some of their best deals and turn them into a rental. Could be short term, could be long term, but they're turning into a rental. They're trying to build their portfolio so that if anything does happen, you're okay. And that goes true even if you're outside the real estate game, right? If you're an employee, doesn't matter if you're that, a business owner, anything else, like you don't want to be relying on that one mainstream of income. Because if you do, then you're in trouble, right? You're in trouble. You're really only in trouble when it's gone, and then you know that you're freaking out. So if you can have those multiple streams of passive income coming in, knowing that you're going to be okay, that helps. I'll give you an example. I had a client in Hollywood, that works on design, doing design sets and things like that. And for him, look at Hollywood. 2020, they shut down. And then 2023, they have a bunch of strikes and they're closed down half the year. Like those guys don't get paid, right? They don't get paid a dime when that happens. Fortunately, when we started working with him in 2019, started to build up his little portfolio of real estate properties and some passive investments, short-term lending, things like that. Next thing you know, he's got about $3,500 a month coming in. Well, when that happens and things shut down, he's got his savings, he's got that income coming in. And so he's barely dips a couple hundred a month into savings because he's almost at the point where he's financially independent at this point. And so he knows that he's going to be okay. He doesn't have to take that next crappy job that's, the cheap, low budget, that doesn't even get on Netflix type of film, right?
Yeah.
He's not going to be working on that. He's going to wait till the better projects come along because he can wait that out because he's got multiple streams of income.
Yeah, and that's passive income really comes down to freedom, right?
It does.
And I know for me, I kind of lived everything that you're saying. I've been a wholesaler to some extent. I was the one that was constantly flipping properties, and I was only as good as my next deal. And so there was those huge peaks in income where you feel like you're on top of the world, and when you make six figures on a deal, but then there's also those long valleys in between. And oftentimes, those big paychecks come after a long valley, so that you see a lot of your efforts just disappear, catching up from, as you were building your business. And oftentimes as entrepreneurs, and I really refer to myself as a real estate entrepreneur, especially now, because real estate investor is such a widely used term, and it's often used by people who are simply running an active business in real estate.
That's right.
And so you have to really define what that looks like. And then passive income is also one of those things. It's a term that everybody uses, passive income. And I've seen the people running Airbnbs use passive income, least passive income strategy there is, I think, out there. I've seen people that are flipping properties say, it's passive income. And it's because, I've put this system in place, or I have that person in place. And even buying rental properties, to my extent now, with what I've learned over the last couple of years being around real estate syndicators and passive investors, I've talked to over 1,000 passive investors, people that put their money to work with others and let them do the operations. So now rental properties to me is like the furthest thing from passive when you look at it on the scale. Now I understand there's just different levels of passive as you go down the line. So I wonder if you could talk to that on some of what you advise people in moving more towards that passive income strategy.
Absolutely. I mean, you're absolutely right. Like passive income is like this been, I don't want to use bad words on the show in case it gets edited if there's kids watching, right? But I mean, it's been pimped out big time, right? I mean, people will just use it and sell it. And you're right. It's usually a business. It's like sometimes part-time or even full-time business you got to do. That's anything but passive. And even like you said, rentals. I mean, now when I talk about rentals, I'll usually do like turnkey rentals where, again, I don't have to find the property. I don't have to go on the MLS hunting for it. I don't have to manage it or anything because I'm a horrible property manager anyways. But even then, I would still put that in the semi-passive category, even though that's a lot more passive than what most investors are doing. And so passive income to me is literally like what you just said. You're putting money with somebody else. Your money works hard for you, so you don't have to work so hard for it. Unfortunately, when people don't have a lot of money and then they see passive income, they think, well, I can do this. And there's nothing wrong with putting your time and energy into something, but don't for one second think you're passive, right? You are actively building something and you can make a killing. You can make a lot of money doing that, but don't call it passive, right?
Yeah, and it's really getting clear. And again, I've been moving towards this path. I'm selling my rental properties, my commercial property, triple net lease. It's about as passive as you can get. The tenants did all of the repairs, they did all the remodel, they run their business, they pay their payments, but it's still active investing. I'm still the one that has to think about the decisions that need to be made. And, ultimately, if something major happens, that liability falls to me.
Yeah.
And so that's where, when you become a passive investor, they call it an LP investor, limited partner, because you're limited, your liability is limited to the amount of money that you have invested and working for you.
That's right. There's always stewardship, isn't it? Like you have to always manage what it is. I mean, even in the network marketing world, they'll talk about like, oh, I just built my team. I do nothing. Every time I've seen people do that, they always lost their team.
Yeah.
Or they try to follow suit and then nobody's working because they're all trying not to work. Mm-hmm. And that's just the wrong dream to sell, right? You're just living on hopium at that point.
Yeah. The residual dream is the residual lie, right?
It is. It really is. So there's always got to be that stewardship, that management, because remember, whatever you put your attention towards will expand and grow, but whatever you ignore will leave you, right? Like if I ignore my teeth, they'll leave me. If I ignore my kids, they'll leave me or for somebody else or something else, right? I mean, I'll lose it. If I ignore my spouse, they'll leave me. And if I ignore my money, it'll leave me too. And so you got to understand that there's always stewardship. It doesn't mean that you can't leverage and create better systems in place or things that, like you said, become an LP on a deal or something like that, right? Or I put my money in and do hard money lending with people, or I have a partnership where I might be a 70% partner, they're 30%, but they're doing all the work. I'm just literally financing it. I become more of an investor that way. But again, I still have to manage it. I still have to make sure it's working. Even if I get that crappy property manager from time to time that I have to take it away from them and take it over or try to sell the properties and cash my winnings out, so to speak, I have to do that. But, just remember, it's like it can never be fully passive. But, I mean, where else can you really like get your money working harder for you versus like the stupid stock market that you can never even know if you're going to have money tomorrow in it, right? I mean, it's awesome. You could literally spend maybe an hour at most a week and still manage a pretty good portfolio of real passive streams of income.
So as you may know, PREIshare is largely involved in truly passive secondaries.
Right.
So I would love to get your opinion or what you would advise somebody that you work with in terms of, I've heard about these passive secondaries. What does that do for me?
Yeah, I mean, I think it's great. I mean, to have a diversification of what you're trying to do can be awesome, right? I mean, like for example, when most people think real estate investing, they think it's just linear. I buy a rental in my backyard. But there are so many different levels you can play at when it comes to real estate investing, right? And even like, are you a debt versus an equity investor and things like that, Like, right, the funny thing is a lot of times I'll hear people say, oh, I'll only want to be an equity investor. Well, you could, and that's awesome. But you could be a debt investor. And by the way, debt investors get paid first before equity investors, right? So when you guys are going in and you're getting into deals and doing stuff like that, it's awesome. Like it's a whole nother way to fill a need in the marketplace. And I think that's one thing too that these listeners should be aware of is that you got to know not just it's good to know who you're investing with, and they got a good track record and everything else. But you also got to ask yourself is, okay, does this make economic sense? Is this really creating value in the marketplace? Because many people just say, yeah, this investment's amazing. I don't know what it really is, but it sounds awesome. They'll pay me X%. That's how you know you have a gambler on your hands, and gamblers can never hold on to money. You want somebody who says, okay, what kind of steward are these people, of course? What are their philosophies? Like if I ever hear an investor or any kind of real estate company say, oh, well, high risk creates high returns. No, it doesn't. High risk means higher losses, right? Higher chance of risk means higher chance of losing. Why would I want a higher chance of losing? I don't want a gambler doing stuff with my money. I want somebody who says, I want the sure bet as much as I can. And even if there's risks, I try to find ways to minimize it as much as possible. And that's where, like, with people like you, like if I'm looking at it, it's like, what's your buy box, right? Like, what's your criteria for picking those deals versus not? And that's everything. Because how many times in the last few years have we heard people going under with another apartment syndication, right? Even self-storage hasn't been doing that well. All because people just were relying on one strategy, one way of doing things, and thought that should always work no matter what the market is. And that's just not the case.
You talked about kind of due diligence. What do you constantly see people failing to do due diligence on? Is there something that you're consistently having to, remember, check this out?
Well, usually they just don't do it. That's the biggest thing, right?
It's the biggest thing.
It usually comes back to people just, do I know, like, and trust this person? But do you really know them, right? I mean, it's hard. I mean, even the people I've known, I mean, I'll tell you, like, for like a lot of the times I'll screen out deals for our own clients, and just say, here's kind of the ones that might fit, our criteria of the various people they could invest with. Well, even then, like, if I just feel like something's off, they can give me all the different, the 60-page sheets, to tell me on the pro formas what they're going to do. And I've actually had companies, by the way, like in the oil and gas space, literally copy their previous deals and send me a new one as if it's a new one. They just relabel it, but it's using the same numbers as before, but it's a totally separate deal. I mean, literally like doing, pretty shady stuff. And you would never know, right? Because if you're just looking at it for the first time, it's like, well, looks good.
Yeah.
And so a lot of times I use my gut, my intuition. Like if something doesn't seem quite right, it just doesn't work. There's a guy that was actually local here that, I was trying to find out what deals he had because I'd heard really good things about him. And by the way, I usually stay away from people in Utah, for not because they aren't good. It's just I haven't, found very many that are great, right? But this guy, he's a transplant, so it was okay. But as I was like looking at some of his, as I was trying to look at his stuff, he would never send me anything. He's like, oh yeah, I got these deals. I did a little bit of turnkey and I got some, lending. So I couldn't even tell what business he was even in. And so I never ever like brought him into my ecosystem at all. Sadly, just a month ago, found out he just took off, ran off with $26 million. And this guy is like, a spiritual guy. People loved him because he was such a good Christian man and everything else. But he went and did that. Now, I'm not saying he was always that way, right? Sometimes people's stuff can change. Like their values might shift. They might change over time. And that's hard to tell too. But I think it's always trying to have your spidey senses on, and then asking ask really the hard questions. Like, what could go wrong? I love asking the question, like, tell me about your worst deal. What happened? And even if they lost money, I'm okay with that. Because if they learned something from it, I trust that a lot better than, and I know Christian knows this too, like, you probably run into how many people that said, oh yeah, I've been investing since 2018. Like, put money with me, right?
Yeah.
They're probably at the local RIAs and things like that,
They've only known an up market.
yeah, no, they're everywhere, right? Like, oh, I've been investing since 2018. Put your money with me. No, I won't, because their dogs could have made money in 2018, right? So what is it that you're doing right now? Like, what did you learn? Like, how many market cycles have you been through? Have you been through the ups and the downs? Like, I knew you when we were in a down. We were there in the middle of the recession. You had to cut your teeth pretty hardcore when that happened, didn't you?
Oh, absolutely. And you do learn a lot from your losses. And I want to back up to what you have been talking about, because the first key thing you said is most people don't do their due diligence. And so it is such wise advice to go off of your intuition, but you have to start with the logical side of it.
That's
and
right.
So many people, they just feel good about something. They just feel good about somebody. You know, they were introduced because of so and so. I mean, oftentimes, of course, here in Utah, we see because of the spiritual side of things, and they
Right.
know that they're, of the same faith or whatever that is. And all of those things are all well and good to help you make a decision after you've taken the time to do just the nuts and bolts due diligence of
That's right.
who is this person. You know, what have they done? What have they taken full cycle? You know, is this something that they've done before, or is it
Yeah.
a brand new idea? Again, all new ideas are not bad, but you have
Yeah.
to go into it eyes wide open. And then what are the actual facts of the deal?
Right.
That's
'cause
right.
a pro forma is just a pro forma.
Yeah. And even if the pro forma looks great, well, how about company-wise? How solid are you as a company? Because I knew another company just a couple years ago. They were doing great. They seemed awesome. They had 200 employees, massive operation. And then all of a sudden, when the market starts shifting and turning and cash becomes tighter, they don't have the cash reserves. And on top of that, they didn't realize they didn't even have the cash flow coming in. They had crappy properties that weren't even paying for themselves. And as a result, of course, because he didn't manage his cash well, the company went under, even though there were still assets. Now, fortunately, there were some people that got, he just put them on title, said, here, take these assets. But most of those people aren't getting back the full amount that they're actually owed, right? Because the assets didn't match up. And so, are they liquid? Do they have any kind of liquidity, that cash just sitting around? And can they verify it? Now, I'm not saying you have to go log into their bank accounts, but can they at least send you a screenshot, dated not 3 years ago, right? Like today, or recent or something like that, just to show that, yes, we've got liquidity. If this were to happen, this is okay. Another company I actually looked at in the state of Utah that, this one they were guilty until proven innocent. And that's kind of how I approach everything, right? It's that trust but verify. And I went in and they were like long-term projects, like literally land, not even build to rent. It's like land to rent, which could be a 5-year period. And to me, that's a high risk business to be in because so much can happen in a 5-year period. And then they're literally developing entire developments and then trying to rent out those developments. And so there's a lot of things that can go wrong. So I started digging in. I'm like, well, tell me more about your financials. What's going on here? How about the value of the land? What if you can't sell it? What would happen here? What if you can't rent it? What would you What would you do? Like, what are your multiple exit strategies in case something goes wrong? So those kind of questions can build off and create more questions. And the truth is, sometimes you might have to lose money to know the right questions to ask. I prefer you not to do so, right? Learn from maybe somebody like us where we've learned from that over time that, we've made the bad decisions and then we came up with more questions. But I think that's really key.
And that brings up a key point where I see a lot of people fail as investors is they find a good deal and they don't want to go to the people that they trust to get advice because they want to hold it to themselves. And sometimes they just don't want to let go of that dream, right? They don't want to let go of the idea that they're going to make this money. And so many people that I could have saved from losing money if they would have ran it by me before they invested their money.
Absolutely.
The problem is once you've invested the money, you're limited on the potential. And at that point, I have to kind of wish you luck and say, I hope that it works out.
Yeah. Well, it's like when people say, hey, apartment syndication, because apartments are coming back, aren't they? Well, they will be, but we're probably not even at the bottom, or we're just getting to the bottom right now. So when they're like, oh, I got apartment syndication, we should do this. Okay, hold on your horses, little Sparky. Just calm down a bit. What if? What if it's not right? Like, are they using fixed financing? Are they using variable rate financing? What are they doing to actually ensure that this is going to work? How do you really know? Oh, well, it's a value add. Oh, so they're going to go and renovate it. Of course, that's what everybody does. How do you know they're actually going to get the rents they think they're going to get? And sometimes you have to do your own due diligence that way. Like if it's in another town or city, you might have to ask, okay, what are the average rents in that area? What would a place like that actually go for? Because if they're saying, oh, I'll rent for $1,500 a month, but you're looking at the average rent there and it's like $800 a month, good luck. Especially if it's like, oh, it's Class B space, it's not going to happen.
And that's
right?
one of the easiest things you can verify.
Yeah, Google.
Anybody with internet and a phone can go, look at a town, pull up similar apartments or homes or storage units or whatever, and verify. And I've done that as well, and it has saved me a couple of times.
Yeah. No, it's true.
Well, and that's the scary part about it is just that people aren't doing that simple. And I think we might be scaring people away from the passive. We're talking about passive investing and we're talking about all this work you have to do. But the thing is if you want to be a good passive investor, you have to be active on the front end and then find good operators and you could be passive from that point forward.
That's right.
So there's really a crucial time period of when you need to be very active when it comes to LP investing or lending in a first position lien debt scenario or whatever it is. And I love that we jumped straight into the meat. But Chris, I would love to.
I know we're not BSing, are we?
Back up a little bit and just. What is Money Ripples and what are some of the principles? Like, how did you get here? And, what are some of the things that you find when you're talking with clients? Why does somebody even come to you in the first place?
Yeah. Well, obviously you can tell from the stories. I went broke at one point, right? So that's good because we always like when broke people show up on the show,
Anybody worth their salt has been broke.
Oh yeah. At least once.
I don't think you could be an entrepreneur or be successful if you haven't kind of hit rock bottom.
That's right. If you have, unless they start in 2021, they're like, "Oh, life is awesome.
Right.
It's amazing." Like, well, good job. So it's a funny story because I wasn't taught about money at all, right? I was literally raised by my poor dad, and my poor dad was middle class dad, worked hard, taught me good values that you should, your word is your bond, right? And my mom would teach me things like follow your heart and your dreams. So I had that right brain, left brain going on there between the two of them. She was the artist, like if you guys know who Bob Ross is. She was trained by the same master painter that trained him, and so she does that kind of stuff. And my dad was like in the automotive business a little bit. And so I got this really good conflicting messages from them. But the one thing that they did share, despite all their arguing, the one thing they did share on though was about money. There was not enough of it, right? There's always a scarcity of it. Hey, we can't afford this. We think I am made of money. Money doesn't grow on trees, or my favorite one for my dad was, hey, I gave up that Corvette so I could have you kids. It's like, oh, thanks, Dad.
Oh, ouch.
Corvette might have been better, but so no, obviously I'm better, but than the Corvette. But of course, I was just not taught about money at all, other than just save a lot of it. He was very cheap, very frugal, as he would say, but we all knew he was cheap, and he would just like put money away, put it away. So naturally, after college, I realized that being an entrepreneur was like the actual path to becoming wealthier. Because if I just took the simple 9-to-5 path, I would never get there. So during college, I actually took a hiatus. I was like, before I get my MBA, I'm going to go start a business. The first business I was end up finding that I thought was interesting was being a financial advisor. And I did that for 4 years. I actually never went back to college, never finished my degree, even though I had one class to go.
And you were great at it. I saw that.
Yeah. Actually, I did okay. I had like a 3.8 average. So it wasn't like I was failing at college, like this ain't for me, Like I was able to do fine in college, but I realized like the entrepreneur path, there was so much more potential. I was like, I can make way more money than having a sociology degree. Sorry, but it's true. So I was doing that for 4 years, and then my dad reached out and he says, well, Chris, when do you become my financial advisor? And I said, well, let's take a look. Now, he had done everything right from what a financial advisor would teach you. He paid off all his debt in 18 years, including his house. So he's totally debt-free. He had actually stuffed his money in his 401k, got the match for decades, I mean, Dave Ramsey probably learned from my dad, right? Like that guy, I tell you, like he was doing everything like Dave Ramsey would tell you to do. And then he says, okay, Chris, I'm 61. I want to retire. Can I do it? I said, Dad, if you want to do it today, you better hope you die in 5 years because that's when you're going to run out of money.
Ouch.
And he said, well, that's not what I wanted to hear. Obviously. So what do? I said, I don't know. You did everything right. I can't just throw you in this stock thing or that stock thing because what if the market goes down? By the way, this is 2005. So it's just a few years before the market did go down. But so I was like, I don't know. Like we never know. And that bothered me. I didn't know what to do. And a few weeks later, I reached out to a friend who I trained to be a financial advisor, but then he actually left to be this real estate investor or something crazy like that, right? So I actually called him up, to be honest, if I would be fully transparent. It was between Christmas and New Year's. I was calling him, wishing him Merry Christmas and Happy New Year's, but I was really calling him up to say, hey, you broke yet? Why don't you come back and work for me? Because the best thing ever in life is to be a financial advisor, right? Because I'm a salesman in a suit, and you should be too. So I call him up, and I'm like, how are things going? He's like, man, my life is amazing right now. And by the way, he only done this for like 4 or 5 months. I'm like, really? He's like, yeah, like my dad and I, we've partnered on some deals, and he's doubled his income as a professor at the local university. Come on, that's too good to be true. There's no way that's possible. He's like, Chris, how many of your clients are truly financially free where they don't worry about money? And he already knew I knew the answer. I'm like, well, they all worry about money. Even the retired ones worry that they won't be able to
That's why
retire.
we have a financial advisor.
Right. Yeah, they're all stressed out. They'll watch CNN, and then if you watch CNN, nobody will feel happy, right? Because it's CNN. So I was like, well, none of them are free. Okay, Chris, how about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these investments? And when I thought about guys that were working in my office since the late 1970s and they still had to work their tails off, I said, well, maybe none. There's your problem.
So is this why you call yourself the anti-financial advisor?
Oh, yeah. Yeah. Because I was already, my faith was already being shaken at this point. But that just about put the nail in the coffin, especially when he's like, go read this book by Kiyosaki called not Rich Dad, Poor Dad, but called
Cash Flow Quadrant.
No, actually, why did I just blank out? I've said it like a million times. It's the one where basically mutual funds suck. Who took my money?
Okay.
Is what it's called. Like who took my cheese, but who took my money?
Uh-huh.
So it's basically saying mutual funds and financial advisors suck. So I read that book, and then I started listening to this radio show back in 2006 with these couple real estate investors. It was like on talk radio. And I started listening to this, and I got hooked. And eventually I realized I had this choice. Either I keep going down the path I was on as a financial advisor and make money but put blinders on about the reality, or just quit and keep my integrity intact. And so I chose the latter. But obviously I was like, well, I can just go teach ballroom dancing and do mortgages. I can do that instead. And I did that. But I wanted to know what these guys knew. And so I started to learn about this. I started to learn about passive income and investing and how I didn't actually have to, put my money in a mutual fund, set it and forget it for billions of years, live on only a whopping little 3%, So if I get to $1 million, I live on $30,000 a year. So I'm like in poverty as a millionaire, broke millionaire, right? I realized, wait, I can take my money, I can do hard money loans, and they'll pay me maybe 2% a month, which obviously is not the case nowadays. But 2006, everybody was like throwing money away, right?
Sure.
So I was like, wait, if I have $100,000, I can make $2,000 a month with just $100,000. This is blowing my mind. Like, how is that possible? And so I was like on cloud nine even before I invested $1, right? Because of just the possibility. And later that next year, between like that, I turned my house into a rental and started doing stuff with that. And I even started doing some things with a little bit of residual income on the business side with my mortgage business. Next thing I know, I'm making like $4,000 or $5,000 a month when I only needed $3,500 a month. I was like, holy crap! I'm 28 years old and I'm able to retire. And I was blown away. First, I never thought I'd ever be there that fast. And the second thing was like, what am I going to do with my life? Because all my friends are working jobs. They're 28, they're doing actual adult stuff. And here I am twiddling my thumbs. And so I naturally kind of gravitated to the thing I love, especially after one of those real estate investors died in a plane wreck. Not the one we know. That's another one that died in a plane wreck. I know way too many people have died in plane wrecks, just so you know. That I never want to fly a plane. Yeah. But yeah, another guy before that, he had died in a plane wreck, him and a few other partners. And I'm like, I remember going to that funeral thinking, you know what? Like, I feel like I have something more to give. I can just sit back and be comfortable and happy with my income, or I can do something with it. And so that's where I came out of retirement in 2007. I started a company with a guy named Garrett Gunderson, did stuff there, and then eventually launched Money Ripples in 2012 when I went off on my own. And really that's what I'm about is how do we create that ripple effect in your life, right? How do you prosper yourself financially to the point where you're not just trying to take care of your family, but now you're trying to look out of what kind of ripple effect can I create? Because yeah, you can sit back and just live fat and happy and live on your passive income, but let's be honest, that's the most selfish thing you can do is take care of your family. And I know that sounds a little bit heretical, but it's true. Just think about your family is not in my opinion, is not really that. It's something you should brag about.
It's not largely contributing to society.
No.
Just taking care of your own, which we need to, that's base one, right?
Yeah.
Great
It's
starting point.
it's a good starting point, but once you do that, like then what? Right? What makes your life have meaning and purpose? And I'll tell you, every time I try to stop working, when people say, like, why do you keep working? Well, especially when I'm almost working again full time in my business. Like, why would you do that? You don't have to. You're making like 40 or 50,000 a month passively. Well, the reason is because you've never been there. You don't know what it's like. If you've ever sat around doing nothing for even like a couple months, like I did, even the second time I was able to retire, which that's another story too. But even that second time around, I was like, I need purpose. I need meaning in my life. I need to do something I feel like I'm contributing and making people's lives better. And that's really what this is all about.
And that's that entrepreneurial blessing, right? Some people call it the entrepreneurial curse. I call it the entrepreneurial blessing. Like really, we have that pull to do something, to create something, to help, to find a different way of seeing a problem and hopefully solve it for the next generation.
That's right. Exactly. What kind of legacy you want to leave behind? And it does. And by the way, that does leave an impact on your family when they see that you could be comfortable, but you don't want to live that life of just ease and comfort. You want to live a life of purpose. And that's a much different place to play from.
Absolutely. Our CEO, Michael Anderson, he retired,
Yeah.
sold his business. They had done how much?
Well, so they had about $1 billion in assets under
$1 billion
management
asset
at that
under
time.
management. Yeah.
And
Small change,
yeah,
just
yeah.
$1 billion.
He said, okay, I did it. I'm good. And then he said 4 days later, he was developing PREIshare in his mind.
And PREIshare is that legacy, right? That's what
Yeah.
I love about the purpose behind this company is it's a legacy that he wants to leave because so many passive investors that invested with him had no liquidity. And
Right.
it was, the pressure was really put on him when those hard situations came up in people's life. And I'm curious your perspective on that. There's secondaries in so many different aspects of passive investing now, but there's never really been secondaries for LP interests in real estate syndications.
Yeah.
Curious if you've run into that in the past and how you advise people, to navigate around having illiquid investments.
I've honestly not really seen much of what I haven't seen other people do what you guys are doing. Like when you were on my podcast, I was like, this seems so easy and brainless, but I'm surprised that it hasn't already been done. And maybe it has.
And
maybe
that's what everybody says. And to our knowledge,
Yeah.
nobody's been able to make it work. We've run into a
Right.
couple of groups that say, man, we tried to do that, but we just couldn't get the traction. And we know what a big push it is to educate that, guess what? You don't own real estate. You own a security.
That's
and guess
right.
what? It really shouldn't be tied up for 10 years. You should be able to liquidate it. You just don't have a way to do that. So that's what
Yeah.
PREIshare is stepping in to do. And it's really exciting to see how it's being received, especially to those LP investors that are holding
yeah.
shares saying, holy cow, I don't have a financial emergency right now, but if I did, it's really nice to know there's shoppers out there.
Oh yeah, I've been seeing it left and right. I've been seeing people liquidate from good investments to help make up for the bad investments
Yeah.
that they get stuck in.
Oh, yeah.
And so if they knew they had an option to say, wait, I can get rid of my shares. Now they may or may not want to make a deal, but they might just be patient enough to hold on to it. But some of them might just say, you know what, I just want my money back now. I don't care if I lost half of it. I don't care because I would rather have that money back in my possession and make that money and I can go and double it somewhere else, right? I mean, just to do that would be awesome, and that's what you guys offer as a solution. And right now it's with all these people in distress and all these apartment syndications and everything else, there are so many people looking for ways to get out, especially if there's a possibility that maybe that deal won't continue to be well. We don't know.
Yeah, and you hit on a couple of key strategies because when you're in a bad deal, that's like the worst time to try and sell, right?
Oh, yeah.
And you're quite frankly, you're going to have the hardest chance of finding a buyer. But what you'll find is people have 10 different investments and one or two are bad, and they're trying to figure out how do they solve that. So you take a good
Yeah.
deal, and you sell it so that you can make the capital call over here, or so that you can offset the loss over here, so that you don't end up jeopardizing your entire portfolio.
Right. But you might be throwing good money after bad if you do that, depending
I
on
see
the
that all
situation.
the time because I deal
Yeah.
with people in our listing hub, and you would think that, and actually we have people that call in and go, okay, so are these listing hub deals all the bad ones, all the lemons that nobody wants? It's like, actually, no. Often they are trying to say, I need liquidity, so I'm going to sell this one that I know's that I'm gonna be able to offload because I have a tax bill or
Right.
whatnot. So there's some gems in there.
No, it really is. There's a need. There's a big need for it, and you guys kind of have the corner on the market there.
Yeah, it's exciting time, to see what's going on there.
Yeah.
So I'm curious from your perspective, like what are your key strategies to help people get into real estate? Where do they start and where do they ultimately want to be?
Great question.
Yeah, most people, I mean, some of them might have experience previously with real estate, but for the most part, it's like the red pill, Matrix red pill. Same thing that happened to me, right? I didn't even know what was out there. I was a financial advisor for 4 years, and I thought I knew everything, right? And then all of a sudden I get awakened, whatever the word is, right? I wake up to a whole new world of investing, and there's way more than just rentals, right? And even with rentals, I can still make way more money than I was thinking I could make too. And that's the thing with our clients as well, is that they're trying to find out, like, hey, I've got cash, but how does this money start working for me so I have to keep working for it? And so a lot of times we start talking about like ways to diversify and strategize, because within real estate, many people don't realize you can actually diversify within real estate. It's not just buying rentals. Like for example, like I've got money that's, lending. I've got money that's in rentals, of course, that I don't manage because I said I'm a crappy property manager. I've got money in raw land, in a raw land partnership there. I've got money in mineral rights. So I have money in land that actually drills oil and natural gas and things like that. Like I got money in so many different places that all have real estate backing to keep and to some level, at least my money's safe, right? I mean, obviously nothing's guaranteed, disclaimer on the show, we're not giving investment advice, yada, yada, right? But to kind of help introduce that world to them and then help narrow it down based on their goals. Because the truth is, people are like, they see something, and if somebody's especially a really good salesperson, like, because I know, like, one of the providers specifically, like, he's one that I have to tell our clients, like, listen, we can't give investment advice. We're not investment advisors. However, it would be dumb to put more than a third of your money with one operator. I don't care if it's in multiple deals. Don't do it just because the guy is an awesome salesperson. Just because he can sell ice to Eskimos does not mean you should do a whole bunch of deals. And so as a result, they say, nope, keep calm, keep the emotions out, right? Again, most of the time they just want a sounding board, right? Yeah. They want somebody to kind of give them some direction. And we'll even try to narrow options. Even if there's like 20 providers, different people they can invest with, you might say, hey, for you and your situation, based on your goals, these 3 to 5 might be a better fit, but you ultimately decide where you want to invest, but let's narrow them down for you so it actually does a good fit.
Yeah, and you anchored on something that I think is so key. Real estate is such a forgiving asset. Again, there's no guarantees in anything, but oftentimes in a real estate transaction, if you're backed by the real estate and you can hold the real estate, or you don't have debt that could potentially have you lose that real estate, ultimately you're going to protect some or all of your money.
That's right. There's a lot of ignorant millionaires in the U.S. today, right? There's 25 million millionaires right now. And of those, I mean, almost all of them, if not all of them, have real estate in their portfolio. But I mean, how many times have you heard people that just had a couple rentals they bought maybe 20 years ago, and now they're possibly multimillionaires today, right?
Yeah.
And they're like, oh, I don't know, I just held on to it. You don't hear that with people in the stock market, right? Like, I have a client that, funny enough, they're the same ones, the Hollywood people, right? Same ones, but she's like, yeah, I actually inherited stock for like these telecommunications companies in 1997. My dad told me, hold on to it. That's what we did. You just hold on to it. So she did. It made a whopping 35% since 1997. So what's that? 27 years, 35%. So they made money, but that's opposite of what her sister did. Her sister's not a client of ours. Her sister said, you know what? I'm just going to liquidate those. And she ended up buying land, did a few other things with that money, and they've made literally millions of dollars. Where my client, she's like, yeah, it's worth a couple $100,000. Yeah. As opposed to a couple million, right? I mean, that's the difference. Like,
that used to be the advice. My parents said that. Hold on to it.
Yeah, just set it and forget it. Hold on to it. Turn a blind eye to it. Which, again, that's like what happened to us as Gen Xers, right? That's how we were raised. Like, let them raise themselves. And then we're a bunch of independent entrepreneurs now that don't want to listen to anybody, right? So you don't want that. No, you want your money to actually have some stewardship. But yeah, if you're going to do anything, if you're going to try to screw up with your money, buy real estate. I mean, at least, again, not a recommendation, but, buy real estate, because at least you know that you could probably most likely come out a winner.
Yeah, and you even find people that aren't millionaires, if we try to boil it down to the basics, the average person that owns real estate, their net worth is, and I don't know the actual statistics, but substantially higher than somebody who had the exact same job, the exact same 401k, exact same everything. That one difference of owning a home. I mean, I think about my mom. Yeah. My mom was a single mom. She raised 4 of us. I still don't know how she did it. But I do know that the house that she bought before I was born was leveraged multiple times to make sure that we had a car, to make sure that we had, food, to make sure that we had all of those things. And then when all was said and done, she tried to give that home away multiple times to my siblings, right? Yeah. And when she was trying to give it away the last time, I said, hold on, Mom. Let me show you how much equity you have in that home. And I know you don't want to deal with the stairs anymore, so let's just take a step back and go find you the house that you want, because this house can propel you to your next step in life.
That's true. I actually had a client where, they had some side business income and things like that, but the husband wanted to quit his job. And they're just like right around 40 years old. They've got kids. They wanted to be more like full-time homeschoolers. And then most importantly, they even want to be expats. They're like, we want to move to Costa Rica or something like that. And so we looked at their situation and kind of saw where there was potential. And one of them was the equity in their house. And of course, this is like 2021 as well, right? And so we're looking at that. I'm like, we've got like $400,000 plus of equity in this house. What if you sold it and then invested that? Even if you earned 10%, you got $400,000. You're making $40,000 a year passively. Yeah. Plus, and the wife, like, you could still keep working part-time in your little business, right, as well. And you guys would be fine. And that's exactly what they did. They went and they actually bought more real estate properties with the equity from that house. and now they're expats living in like Cabo San Lucas, which
Nice.
is not the cheapest place. I'll tell you that much if you've been there. So it's crazy, but like that's what they're doing. Like they're like living their best life, right? Like trying to homeschool and do what they want to do, and they're traveling and giving their kids an experience that's a legacy that you can't say that money can't buy, because money is literally buying it, right? But it's something that if you didn't have the time and the ability to do so, if you didn't have the passive income, that wouldn't really be a possibility for them.
Yeah, and it's interesting because in real estate, 10% is a pretty low number. You can be in a pretty safe position. In fact, one of the safest positions, which is first position lien debt.
Yeah.
Right. And you can get 10% or better. And we just recently had Chris Crone on the show, and he talked about how single digit returns are the absolute killer of retirement, but double-digit returns can set people free.
That's right.
And those double-digit returns, even if it's on, like you said, an amount of money that might just be sitting in their home, that might be paying them their full-time income if they've been living in the house long enough.
Exactly. And so many people don't realize that. That's why some of the advice I give is get lean, get liquid, and get out, right? And I don't mean like get out of the house, right? I mean like get lean, obviously be a wise steward of your money. You don't have to live cheap. You could still have that latte if you want that latte or whatever. You can live on more than rice and beans, right? As our good old friend Dave Ramsey likes to say all the time. But once you do that, then it's get liquid. How can you get the access to that capital? Because everything you're taught by a financial advisor is to get illiquid. They tell you, throw your money into the house like my dad did. Well, that's not a liquid place to go, because how do I know? Last recession made that apparent to me when I had equity in my house and I couldn't get it out. Yeah. And then I was trying to short sell, and then Lehman Brothers was the bank, and they're like, no, we don't want to short sell anybody. We just want to let you go to foreclosure, right? And so I had to go to foreclosure in 2009 on my house because they wouldn't let me do it. That equity got trapped and disappeared, you know? So you got to get liquid. And of course, throwing a 401k, your company 401k, you have to either get fired or quit to finally get access to those funds without having to borrow against it a super crazy payment, So all that stuff is ridiculous. But if you can get liquid, then you have that money to then get it out. And I had another client. He was in San Diego, and I have a lot of Asian clients, right? And Asians are like the best super savers you will ever meet. I mean, these guys. I mean, it's so funny that people won't believe that they'll save half their income, but they will, right? And so he was no exception. And he told me, he's like, Chris, I'm on a goal here. Like I am going to be debt free in 6 years. I'm going to pay off my house and I'm going to pay off my rental. And so I'm looking at it. I'm like, dude, you got a lot of equity in your house because you live in California, and your rental's got $600,000 of equity. What's your cash flow on that rental? $200 a month. Okay, that's a 0.3% not cash on cash, return on equity, right? That's horrible. You could put it in a savings account and make a better return than that. He's like, yeah, but no, when I get it debt free, then it's gonna be awesome. Well, what will you make if you pay off the mortgage? $2,400 a month. You got $600,000 in here. I'm like, dude, sell this property off. If you're not, at least if you're not willing to refinance your own property and get that equity out and do something with it, at least sell off that property. It took him 2 years to do it. He finally sold off the property, got $700,000 because luckily he had some appreciation, even in California, which is risky, right? So he had $700,000, and then he goes and buys a bunch of rentals out in Louisiana, which is what I said. I'm like, listen, if you're going to buy rentals, go out east. Like, they suck out here in the western half of the United States, but out east, southeast, Midwest, they're great. So he did. He bought them all in Louisiana because that's an area that he knows pretty well. And he actually just bought his 7th property now with that. He's now cash flowing over $100,000 a year.
I was going to say $100K.
Yep. He's at $100K a year with that money. And the funny thing is, he was still, right now, he would be 1 year away from paying off his rental property. So he would still have been at $200 a month, maybe $250 if he raised rents, if he were lucky. Yeah. He probably wouldn't do that either. So just selling that off and getting those rentals, like, it completely changed his life.
Well, and that time value of money that you're talking about, a lot of people don't pay attention to. The return on equity, right? They start thinking about return on their original investment. They say, oh, well, I only invested $5,000 to get into this property. Mm-hmm. But if they have $400,000 in equity and they're only making $200,000 or $200 a month, there's all of that lost upside. And this is what...
There's thousands a month you're losing on.
Yeah, exactly. Yeah. Mike Anderson talks about that a lot. That's why within our fund, the whole strategy of short cycle investing is built around that concept is, buy something late stage where we can see an exit sooner, take that equity, reinvest it, compound those returns. And that's why we can go from, 11 to 16% cash on cash to 30 to 32% within about a 5-year period if you look at reinvesting your earnings time and
Yeah.
time again, and we get to see those exits.
Yeah, I mean, it's funny because you serve a need, which is great. You always want to have that win-win-win, right? So we already know it's a win for the operator that at least they're not losing out and getting all this stress for people freaking out trying to get their money out of it, right? But you give them a win because at least you give the clients the money that they need right now, get them out of their LP. But you get a win because obviously they had to deal with all the crap. They had to deal with those early years of like little to no profit, right? So they already had to go through that, and then you just step in late stage. I'm not, and some people might say, I'm sure a critic might say, "Oh, you're just manipulating the situation. You're just like a wholesaler." Yeah, but it was still a win-win. Those people don't feel ripped off. They're like, "Thank you for getting me out of this thing. I can't handle anymore. I can't stomach it."
Yeah.
If those people, those are exactly the people you guys should be helping, right?
And the better it gets, the more of their upside they can realize. And that's what we find is most people come to us not because the deal's bad. It's because something's happened in their life. And so if they got into a value add, property, and they've been through those first 2 years of value add, their equity may be worth double, right?
Right.
Maybe they don't get double. But what if they got an extra 10 or 20% on their money and they could get out now versus waiting another 5 years, and this life situation is still pressing?
Oh yeah. I mean, how awesome would that be for them to say, "Hey, I still got something, and I got my money back, and I can finally deal with my life and not stress about whether my money's all locked up," right?
Yeah. And the other strategy you see, and I think we mentioned already, but I'm talking to an LP right now, and he's looking at exiting a large portfolio. And the reason he's doing it is because as he started learning more and more about the industry, he found better deals. And he got introduced to people who could give him higher returns. So he's like, if I could just exit now, even at a loss, and then I can move that money over here where they're going to compound my money a lot faster. There's some huge strategy in that.
Absolutely.
So that's what we do.
Yeah, that's right. No, it's great. It's awesome. I mean, that's what I love about this game, right? Because it's never about that win-lose. Because you know how people in wealth, they always think like, well, or people that aren't wealthy especially, they think, oh, I got to screw somebody over for me to win. So if I'm a benevolent person, I'm just going to be the one that gets screwed and let everybody else win. And then they become a victim in their life and they just let it go by. And I was that guy. Like even as a financial advisor, I had that viewpoint of, well, if I'm going to be a good financial advisor, let me go broke so that my clients will win better. And that didn't help anybody. Where ironically, like actually, here's something that was really interesting in 2006 when I was trying to figure out, okay, what do I do? I'll start doing mortgages. And as a mortgage broker, I was trying to be cheap. I was always trying to cut down like my origination fee to say, hey, if you're a real estate investor, you're going to do lots of deals with me, I'll give you a break on that origination fee. Use me, guys. I'm cheap, right? And that never worked. Weird. I don't know why, right? But when I mentioned like I got a little bit more residual income by shifting some things in that business. Well, I remember I was talking to a friend of mine who did do real estate investing. We're talking about ideas. He's like, well, do you like doing mortgages? I said, not really. Like, I don't like the paperwork. I love teaching. I love helping them figure out the strategy, but I hate the paperwork. He's like, Chris, why don't you just find somebody to do it for you? I said, there's no nerd that likes to do paperwork. Is there? He's like, trust me, there are. Yeah. And so I go to my broker and I say, hey, who in the company fits this description? He's like, oh, Clark does. Because anybody named Clark would be that description, right? And so that's not your middle name, is it?
No.
Just checking. I mean, my middle name's Carl, so that's kind of nerdy
but
too.
But it's funny you say that because I know a Clark who is very diligent with that type of thing. So
yeah, it's got to be diligent, right? He might be the same guy, for all we know.
But
but I went to Clark and I said, listen, if I send you these clients, they already are ready to go. I just need you to do all the work. Would you do that for 50% cut? And he's like, yeah, all day long. If you just spoon feed me clients, I'll do it. I'm like, great. Well, then I'll give them to you. And I would get paid that way.
Sounds like you got a partner.
Yeah, you got a partner, right? And what's funny is he charged the full origination, right? So even though I was 50%, because I was always cutting 50%, I actually got paid the same as what I was doing, trying to devalue myself. And the ironic thing is that those clients were actually happier. In fact, they would send me more referrals to then send on to Clark, And so I was making money. I'm like, wait, I don't get it. You're paying more money, but you're happier. How is this the case? And it's that abundance mentality, right? Like instead of just trying to be scarce and believe that it's a zero-sum game, that someone has to win and someone has to lose. It doesn't have to be that way at all. If you realize that real estate, same way, no matter what, if you're always looking for that win-win and how do I serve people, solve problems for that person, add any value in their life, that is the secret to creating any kind of wealth in life. That is the real secret of making money.
Attract the people that are willing to do what it takes to get that financial movement, and that's what makes an economy, right?
Yeah. And we talked about due diligence before, bringing it full circle. If you have that kind of attitude where you know, like, no, it's people that serve and solve problems and add value, those people that make money, funny enough, you'll start attracting those people. It's when you have a gambler's mentality, right? When you think, oh, I'm going to get rich, I'm going to get big. You will find the people that are the big marketers out there on their social media page, everything saying, you're going to make lots of money, pay me 50 grand, I'm going to make you a killing. Oh, but you'll have to pay me a whole lot of money first before you make that killing. Once you do that, that's how you're going to get rich. And you're like, yes, I'm going to do it. You will find those charlatans. You will find those people to rip you off. And then you'll just say, oh, everybody's out here to rip me off. Yeah, because you're that person. Really, they're just reflecting who you are because you believe it's a zero-sum game. If you believe that really there are people out here like us wanting to serve people, you'll find those people, especially if you're that person yourself.
And if you're doing that due diligence, you're actually doing a favor to the person that is bringing you the opportunity as well.
Yeah.
I mean, I can't tell you how many times, somebody that's looking to invest has given me insights where I'm like, oh, I should change that, or I should not do the deal based on that, extra set of eyes. So I think there's a huge benefit with all of that. And, for us, what we're trying to pioneer for the marketplace is liquidity. That's that win-win scenario we want to give, is creating liquidity, both with our secondary marketplace and the PREIshare liquidity fund. I mean, I was just talking to somebody the other day that he has his own fund, right? And their fund is, kind of at a stage where they're wanting to find more opportunities, and they only raise when they have an opportunity. And they started looking at the returns they could have with us, and they're like, well, we could raise the money now, put it with you, and then on a quarterly basis at any time, we could start withdrawing that money.
Right.
And so now it gives him the ability to arbitrage on his own fund while he's finding those, phenomenal deals that are out there.
Isn't that crazy? It's an awesome world, isn't it?
Win-win-win.
All the things you can do. It's just amazing.
Absolutely.
It is. People forget that just because it's financial doesn't mean it doesn't tie into the universe of how everything works and energy and karma, and it's
That's
real.
right.
And I'm sure as a financial planner and a non-financial planner, you've seen that come to life so many times.
So many times. Yeah. It's true. I mean, like, if you realize that a transaction is not about the thing, right? It's not the building that pays you, it's the people, right? And it's always a people game. It's always so much easier. I mean, that's what changed for me. I mean, even in 2006, it wasn't so much just getting out of the rat race, right? And even when I went broke in 2008, 2009, like when I met you, I mean, I eventually went over $1 million in debt at that point, because we started a brand new business. I threw all my money in that. And then, of course, the markets tanked, including the real estate market. So I was losing money there. I was losing money in the business. Next thing I know, I'm like, I went from millionaire to upside down millionaire.
No.
And when I was left with no money and no credit, that's when you have to really ask yourself, like, who am I? Because I used to put the stuff. I bought the nice house and I had the nice Mercedes. I turned in my Mercedes even before they could repossess it. I'm like, you're going to take it anyways? Here's the keys. This will just save us the hassle.
Let's not have you pull up to my house with the truck.
Yeah, exactly. Like, please don't embarrass me. Just take it. I'll walk home or whatever. But, like, those kind of things happen. And like, I had to ask myself, because you put the stuff out in front to say, this is my value. Look at my stuff. Don't look at me. Look at my stuff. But after losing everything, that's when you realize you have everything. And I started to realize, like, wait, I'm not, am I an imposter or not? And that's why I even changed my tune. I started teaching about cash flow. Like when I met you, Julie, like I was teaching about cash flow at that point because I was going broke. I couldn't teach about passive income anymore because I was back in the rat race. I couldn't tell people to get out of the rat race when I was back in it. So I switched it. I'm like, how do you get resourceful? How do you find money? Because that's what I was doing. And so that whole process came because I went flat broke. And I didn't go bankrupt. It would have been much easier if I did. Man, looking in hindsight, I'm like, man, that would have been so much easier to have to do that than have to pay back the debt.
Yeah.
But I had to figure out how to create value. How do I add value? How do I serve people and solve problems? And at that time, the problem was people were like, I would like to learn about this stuff, but I just can't find the money. And in the back of my mind, I'm thinking, well, I'm broke, way broke than this person is. Like, I would love to have their financial situation. So I would tell them, I'm like, if I could find the money, would you pay me? They're like, well, yeah, of course. I'm like, great. Well, if you do this, this, and this, and this, and this, you'll find the money, and then you can pay me. So I was like literally like trying to survive off of just, it seemed like I was wheeling and dealing, but I was literally just helping them do what I was already doing myself. And that's actually what helped pull me out of that. And especially as I started to get back into passive investing in the mid 2010s, then by 2016, I was able to retire and do it a second time. And the cool thing about that is that you start to realize it wasn't luck in 2006 when I got out of the rat race. It wasn't just market timing. Yeah. It was literally formulaic. And to do it a second time, great. This works. This stuff actually works. And if people realize that, if you always come back to the heart of it is, how do you serve people and solve problems, you will get paid. You will always get paid if you always have that mindset of always trying to find that win-win transaction in people's lives.
And the internal confidence that comes from coming back from a situation like that is invaluable. I mean, it's so valuable. There's nothing you can, really trade that for, because now you have that confidence and you can go to people hopefully before they have to go through the hard times and say, let me teach you about what I've been through.
Exactly.
How many times have you had to coach a client out of just that mental game of having to start over, or, maybe they lost an investment and it's like, you can do it again. Just, this is how it works. Just get going. You rebuilt, you started, not only did you start over, but you had to pull all of that debt with you and recover. So, what are some of your favorite life lessons or something that you would instruct somebody that's just anticipating or worried about how to move forward?
Well, first, I get it, right? It's funny because there's somebody reached out to our company recently saying, okay, I've got some money I can invest, but I've also got a lot of debt, and I'm having this major life turmoil going on in my life right now. I don't know if I'm a good fit. I'm like, you're exactly the person we can help a lot. In fact, probably better than people that just say, I've just got cash sitting around. What do I do with it? And but he feels horrible. I'm like, listen, I can understand that, but I can guarantee you don't have as bad of a financial situation as mine was. Like, you weren't like $1.1 million in debt. You're like a few $100,000 debt. Whoop-de-doo, shut up, stop whining, And I'm sure Donald Trump would say the same to me. He's like, I was 900 million in debt. Shut up, Chris, You're 1.1 million,
It's all relative.
It's all relative. They're all numbers, right? And so I get it. I understand that. So I try to come from that place of empathy as saying, hey, it sucks. And I'll tell you, like, even when I finally did my first real estate deal, I was scared to death after losing it all, because I was like, what if it happens again? So I had to have like my own little training wheels, and that's why the first thing I did was a turnkey property. I was like, well, I know I'm a bad property manager, so why don't I at least try this? At least have a property. And even then I was like nervous. I'm like, I know it's like only like $30,000 down payment, but what if I lose it? It's not like I didn't have more at that point, but I was scared, And the thing is, you just got to try. Just try a little bit. Even if it's just one deal, try it. And when you start to get the checks, that little faith muscle builds a little bit more, right? And then you do it again. And then you build that faith muscle a little bit more, and you do it again. And fully recognizing that you could lose money at any time. That could happen. But the one thing that I had to come to terms with for myself was that, and I've had to say this to a few clients too, is that you're not the same person you were, hopefully you weren't, as you were when you lost that money. Like, if you actually learn something from that experience, and the lesson shouldn't be, well, I'll never do that again. No, that's not the lesson. That's a victim lesson, right? Like, you got to have the perspective of, what did I do wrong? What could I have done differently? How could I have asked different questions? Or you know what? Maybe it was just a crappy market, and just that stuff happens. How can I protect myself next time if that were to occur, right? When you start to plan for those contingencies and realize you're a different person as a result of what happened, why would you expect it to repeat again? You will not have the same experience twice. It never ever looks the same. Even when you go through struggles, like even when I was trying to get to the point of retiring in 2016, I went through a divorce in 2015, and that sucked. That was horrible. And I was going broke, but it was only for like 4 months I went broke, right? Because where I went like 2.5 years broke, which is about the time that I met you, right? And already after I met you, I was already flat broke. I could barely afford the suit I was wearing, right? But actually, I couldn't afford the suit I was wearing.
That's why we like you so much. You were humble when we met you.
That's right. It's like he was just happy to have anything coming in at that point, right? But but to be at that point to say, okay, this is okay. Like, you can do this. This works. And even if like even when I went through that divorce, like I lost a lot of money, but I learned from 2007, 8, and 9, from that 2-year time period, that if I had just actually opened up and was willing to ask for help and talk to people, that would be worth it. It's funny. I was just at breakfast the other day with a partner of Chris Crone's old partner, right? And he's like, you know what, Chris, the thing I respect, like the thing that got me to revere you, which I'm like, okay, this is already feeling a little awkward. We're at breakfast. He's almost holding my hand. I'm just kidding. He was holding my hand. But he's like, this is why I actually started to revere you. He's like, do you remember when you asked me for money? I'm like, I honestly, I was like, no. And I was like, was it when I was going through a divorce? He's like, yeah, you're like, asked for like a couple $100 because you were just trying to get to an event to speak at. You had no money. And at that time, like, I was literally borrowing money from people to buy stuff from Goodwill, like, because I left everything to my ex, right? And I took nothing with me. I'm like, I didn't even have silverware, And I had to like go and, get basically borrow money from somebody to help me buy silverware, even if it's just like a fork and a knife, those kind of things, right? And he's like, yeah, when you ask for that $200, like at that point I realized like I want to be like that too, and that impacted me because I mean, I'll tell you, I've got an ego just like anybody, right? I can get competitive, I can get stubborn and everything else, but going through that, like that was way different. But because I was willing to ask for help, I got out of that situation faster. Not because they bailed me out, but because I knew I could do it again. I had that confidence saying, you know what? I've been there and that was way worse in some ways. This is easier. Get through it. And that's why it was just really a year later, I was able to eventually get out of the rat race with my passive income. Not because I was a lot smarter, but just because I had so much more faith, I knew I could do it again.
And the key here is that, we always put this disclaimer out there that there's always, there's risk in every investment.
Yeah.
And a lot of people they let that go through. Oh, that's just the disclaimer, let it go. But the key is going in with your eyes wide open and understanding, okay, I'm going into this investment because there's this much upside and there's this much potential of loss.
Right.
And I understand that this is still a possibility, but I'm willing to risk it because if I do that enough times, ultimately I will be successful. If I get here, if I lose this money, then I know that I can rebuild by, whatever those means are. And so if you can go into it with your eyes wide open, understand the reality, there's always upside. There's always something that you can do to rebuild. And most of the time, if you take a loss, you're going to come back stronger.
It's true. And I've seen that even with like stock trading, right? We would tell people to let the profits run, but then cut your losses short. And that doesn't always work in real estate because sometimes it can be an all or nothing game at times. But I'll tell you, like I've had some clients lately because a lot of them would go do deals outside here and there. And then especially with the syndication market, the way it's been, some of them are like, I've lost 25% of my money. But what's also awesome though, is despite that, with the other good deals they did have, the other 75%, it's already paying them way more than they would have than if they just left it with their financial advisor. And that's the thing. It's like, that's why diversification is important. That's why you don't throw all your eggs in that one basket, that one deal, right? Because even if you lose, sometimes it might just be a delay of getting paid, but if you do lose, fine, you got the other 75% that can carry you through. And it's only the people that usually have that gambler mentality, or they get connected with people that are gamblers, and then those people just refer you to all those bad deals. We've seen some of those groups. I've seen like real estate mastermind groups that literally almost every deal they refer to goes south because really they're not good upright people either. They're okay people. They're human like all of us, but their values just aren't aligned with what creates real wealth. They're very fleeting. It's here today, gone tomorrow type of people.
Yeah. Chris, this has been enlightening. I know that we could speak all day long.
In fact, we just did. Oh my gosh, we took too much time.
No, but if there was, one piece of advice for somebody who is feeling strained right now, maybe they're a high income earner, they have money to invest, but they're saying, I don't want to go buy another job. What's your first piece of advice?
Don't do it alone. Like, you don't have to do it by yourself. So many people think it's either DIY, do it yourself, or DFY, done for you, right? The financial advisors are done for you. They're all like, set and forget it, don't think about it. But that's bad use of your stewardship. If you DIY it, like you're going to be watching these podcasts forever, right? You're going to be doing all this stuff, researching, and then you're never going to take action. The easiest way to take action is actually to find somebody, anybody in your life, anybody. It could be Christian, it could be Julie, it could be me, or whomever, right? Find somebody who's been there, done that, and still doing it today. That last key is a real big key, right? People that actually are still doing it. They weren't like a has-been and then they can't replicate it, right? Someone who's been there, done that, still doing it today. Look for that kind of guidance. Look for that support, because that perspective might give you just enough faith to actually change your life.
I appreciate that your advisory style is one part financial advice and one part just therapist, right? So where can people find your content? I know you've got Money Ripples podcast. Is there anywhere else, or what's the best place for somebody to go to consume?
Yeah, Money Ripples podcast. You can find that on any, podcast type of platform like iTunes, Spotify, YouTube. And we also have our Money Ripples channel too, where we give a lot of, like daily videos we post every day.
Very cool. Okay. Well, thank you for joining us, and thank you folks for joining us as well.
Thanks, everybody.
Psst, passive investors. We've unlocked the #1 secret to finding performing passive real estate opportunities.
We want to bring this secret to investors like you. If you're ready to build wealth with real estate like the ultra-rich do, click below to find out more.